Let's dive right in. New investors often ask, should you start with a classic S&P 500 ETF or jump into Bitcoin? The S&P 500 is slow and steady. Think Toyota Camry. Bitcoin, high risk, high reward, like a rocket ship. My goal, break down the real pros, cons, and which type of investor fits each. We'll compare both side by side, starting with the S&P 500, then Bitcoin, and wrap up with how to choose. No hype, just what you need to know to make a smart decision. Let's get started. First up, let's talk about the S&P 500 ETF. This is often considered a cornerstone investment for many portfolios. It's a single investment vehicle that gives you exposure to a slice of America's 500 biggest companies. It's like owning a little piece of each of these giants. Think Apple, Microsoft, Amazon, and many more leading corporations. The main advantage of an S&P 500 ETF? Instant diversification across a broad range of sectors. So if one company stumbles or faces a downturn, the hundreds of others within the ETF help to balance it out, mitigating your overall risk. Looking at the long-term picture, the S&P 500 has historically averaged about 10% annual returns over several decades. Of course, past performance doesn't guarantee future results, but it provides a good indication of its potential. This makes it a vehicle for steady, reliable growth over the long haul. It's also incredibly easy to buy and sell shares, easy to manage within your portfolio, and perfect for passive investors who prefer a hands-off approach. Furthermore, many of the companies within the S&P 500 pay dividends, which you can then reinvest to take advantage of compounding growth over time. Now, for the potential downsides, it's definitely not a get-rich-quick scheme. You shouldn't expect to see explosive gains or become wealthy overnight with this type of investment. Also, it's heavily US-focused, so you're essentially betting on the continued success and stability of the American economy. Finally, dividends are usually taxable, which can impact your returns slightly, but if you hold it within tax-advantaged retirement accounts, that's less of an issue to worry about. So bottom line, the S&P 500 ETF is a stable and proven way to build wealth gradually and consistently over the long term. It's the tortoise in the race, not the hare. It's slow, steady, and ultimately dependable. And for most beginners who are just starting their investment journey, it's often the ideal starting point. Now let's shift gears and see how Bitcoin compares to this more traditional investment approach. Now let's delve into the world of Bitcoin. This digital asset has captured the imagination of investors and tech enthusiasts alike, promising a new era of finance. If the S&P 500 is a reliable family sedan, offering steady, predictable returns, Bitcoin is a rocket on wheels, a high-performance vehicle capable of breathtaking speed, but also requiring a skilled driver. It's a decentralized digital currency, a network of computers verifying transactions. No government or bank controls it. It operates outside the traditional financial system, offering a level of autonomy that appeals to many. Bitcoin's appeal? What makes it so attractive to investors? Massive growth potential. The possibility of significant returns is a major draw. Early adopters made fortunes, riding the wave of Bitcoin's initial surge in value, and while those days of exponential growth are rare, the potential for substantial gains remains a key motivator. Big swings still happen. The market is known for its volatility, presenting both opportunities and risks. There's a fixed supply, a fundamental aspect of Bitcoin's design. Only 21 million coins ever. This scarcity is a core tenet of its value proposition. Supporters say this scarcity could drive prices higher, especially as adoption grows. As more people use and accept Bitcoin, its value could increase due to limited availability. Some see Bitcoin as digital gold, a store of value in the digital age, a hedge against inflation, a way to protect your wealth from the eroding effects of rising prices. And government money printing. It's seen as an alternative to traditional currencies that can be devalued by central banks. It's also about financial freedom, a desire to break free from traditional financial institutions. You control your money directly, no middlemen. Transactions are peer-to-peer, cutting out banks and other intermediaries. But the risk is huge. Investing in Bitcoin is not without significant dangers. Bitcoin's price can swing wildly. It's known for its extreme volatility, up or down, unpredictably. 20% in a day isn't unusual. Such dramatic fluctuations can lead to substantial losses. It doesn't produce income or dividends. Unlike stocks or bonds, its value depends on what others will pay. It's purely speculative, driven by market sentiment. Regulation is a wild card. The future of Bitcoin regulation is uncertain. Governments could crack down, imposing restrictions or outright bans, impacting price. Such actions could significantly devalue Bitcoin. Security is on you. You are responsible for protecting your Bitcoin. Lose your keys, lose your coins. There's no recovery process if you lose your private keys. No safety net. There's no insurance or protection against loss or theft. Bitcoin is for those who see the future of finance and want to be part of something revolutionary. While it comes with big swings, it also offers the chance to be at the forefront of a financial transformation. And for those who embrace innovation, it offers a shot at extraordinary rewards. It's a unique opportunity to participate in a rapidly evolving market. It's not for the faint of heart, but for those who thrive on excitement and believe in the power of new technology, or anyone needing short-term stability. But for forward-thinking investors, Bitcoin can be a dynamic addition to a modern portfolio. Know what you're getting into, understand the risks and potential rewards before you buy. Thorough research is essential before investing in Bitcoin. Now let's put them head to head. Let's compare Bitcoin to other investment options. The S&P 500 ETF, a popular choice for many investors. It's well diversified, giving you exposure to a wide range of companies across various sectors. It's known for its relative stability, offering a smoother ride compared to more volatile assets. Plus, it pays dividends, providing you with a regular income stream. All in all, it's considered a low to medium risk investment, making it suitable for a broad range of investors. Now, let's talk about Bitcoin, a high-risk, high-reward investment. It offers the potential for significant returns, but also carries substantial risk. Unlike the S&P 500, Bitcoin doesn't generate any income, and its price is notoriously unpredictable, subject to wild swings. Given its stability and diversification, the S&P 500 is an ideal foundation for many investors, offering steady growth and less stress. While Bitcoin brings the potential for rapid gains and exposure to cutting-edge technology, both can be a solid foundation for long-term financial goals like retirement or building wealth in the digital age. Bitcoin, on the other hand, is for those who want to diversify with a forward-looking asset and are comfortable with some volatility. And for those who are open to new opportunities, allocating a portion to Bitcoin can add excitement and growth potential to your portfolio. Remember, you don't have to pick just one. In fact, many investors use a core and explore approach, allocating the majority of your money to a stable asset like the S&P 500 and dedicating a small slice to a higher risk, higher reward investment like Bitcoin. For example, you might choose to allocate 50% of your investment portfolio to the S&P 500 and 50% to Bitcoin, reflecting a belief in both traditional and emerging markets, and the remaining 5% to Bitcoin. This way, you get the benefit of stability and still have a shot at high growth, without putting your entire financial future at risk. Ultimately, the right mix depends on your personal financial goals, your individual risk tolerance, and your overall comfort level. Don't let social media hype or the fear of missing out, FOMO, drive your investment choices. Be honest with yourself. Are you truly focused on building long-term wealth and securing your retirement? Or are you simply chasing a quick and easy win? Your answer to that question will ultimately guide your investment strategy. There's no one-size-fits-all answer, just what's right for you and your unique circumstances. So, let's wrap up this discussion. That's the S&P 500 ETF versus Bitcoin in a nutshell. Which fits your goals? Steady growth, high risk, or a blend? Drop your thoughts in the comments. Are you team S&P 500, team Bitcoin, or both? Want a sample beginner portfolio? Comment sample portfolio and I'll make a follow-up video. If this helped, hit like and subscribe for more simple investing tips. Thanks for watching. See you next time.